What's going on, everybody? Happy day 3, session 3. We're going to get into the charting basics. I don't know about you, but I'm having a great time. Are you guys having a good time? I mean, this is the first time we've ever done anything like this, hosted an event like this, and I just want to say that it's amazing when you guys text. I mean, I'm responding to every single text that you send over. I mean, the feedback so far has been amazing. So I just want to thank you for being here. I hope that I provide you some value that you could take with you down the road and help you out in your options trading career, and that you're able to connect with us here at Us versus Herd, and hopefully we become a trustworthy source for you for options trading. Today we're going to be doing, I'm just going to go over the syllabus real quick. We're going to be going over charting basics. We're going to look at some setups. We're going to go into some real world charts as well. So in the chat, when we get there, if you want to look at some charts, we can analyze some charts in real time. I have some setups that I'll be looking at too. We're going to be doing the Us versus Herd Academy lifetime membership giveaway. So it's a $1,500 value is going to be given away to somebody random. I'm gonna work with my buddy Jeff. He's actually in the chat right now. Say what up, Jeff. He's going to be helping me out with that giveaway live. So we're going to announce that live after we get through the charting basics, look at some setups, and let's see what it does here. What's going on, Anish, Dorian, Miguel, Angel, Jeff? If you're here, say what up. Luis, Keith, Josh Price, Juan, Paulette, Bernardo, Hank, Joe, Matt, and Sandy. Man, you guys are active today. Praveen, Shashwat, Manny, Ethan. Yo, Bill, what's going on? We got Ramsey, Keith, what's going on? you guys. So yeah, I mean, today's definitely exciting. So let's get into it here. Drop a like on the video, drop a comment. Let us know that you're here, you're watching. We're gonna get into some charting basics now. A lot of people, they don't actually take the time to learn charting, right? And I know that, like, when I was starting out, charting really wasn't my thing. I was always like, hey, why can't I just start trading? Why can't I just, if it's going up, I'll just trade it going up. If it's going down, then I'm going to trade it going down. And first, we're going to go through some of the bullish patterns. Then we're going to go through some of the bearish patterns that obviously right now we're in a bull market. So these are going to be what you see the most frequently. Obviously, right now, the bull flag is very, very common in today's market. I mean, over the last couple months, a lot of these bull flags have been failing to the downside. I mean, we've been having, I think April and early May, March, April. I mean, it was definitely, I would say, a little bit expert level. Easy mode was turned off. And a lot of it had to do, you just had to pay attention. I think when you're looking at chart setups, we're also not patient. Like, we want to buy, like a lot of people, what they do when looking at this bull flag setup is they'll buy something, essentially like right here, right? They'll buy something right here, and then when it gets down to here, they sell that. Is it okay? Can you guys see the yellow on the white? Maybe I'm gonna change the color here. Let me change the color here. Is this better? Yeah, I think that's better. Yeah, we're gonna go with pink today, because the pink on the white, or the yellow on the white, was definitely messing my flow up here. So yeah, easy mode. Yikes. So what happened, like, the biggest mistake is, I think, as traders, not waiting for the setup. We get impatient. We're like, oh, it's going up, and then something like this happens. Instead of waiting for the chart to form some sort of pattern and wait for entry, as you can see here, it's much better to enter here when there's a breakout point. So, the other big mistake that I see that people do is when you see a chart look like this, they'll start to short this area right in here. So they'll start shorting, and then when it breaks out and reverses on them, they get into some trouble. So we're going to go through some real world examples here, but I'm just going through some of the more famous patterns right now. But yeah, that's a big no. And the next chart that I'm about to show you, the falling wedge. A lot of people start to short this as well. And when you're looking at a chart like this, and we'll go into the next one. The next one's also going to be the ascending triangle. A lot of them are kind of similar in a way. That happens to Robinhood traders when they don't chart. They get wiped out before the move happens. Yeah. But the falling wedge, when you start noticing range starting to get tight, right? So if you look here, the range gets tight in here, and these black lines are starting to come together. So it starts out with a pretty wide range, and a wedge starts to occur when the range gets tighter. And what that means is basically the range the stock is moving in a tighter formation, and then it creates this wedge formation. Now you want to be careful. Now these are obviously bullish charts, but these could fail. I mean, this could definitely, this wedge is saying it's going to go to the upside, but it could easily break down, and then you're definitely, you want to exit as long as it's maintaining this wedge. And this is why it's important to set stops and not use hope as a strategy. Like I said yesterday, hope is not a strategy. I hope it goes up, or I hope it goes down, I hope it does this. Like so many people, I wouldn't even call them traders. They're just people that are like, I hope AMC gets to $100 a share. Like, listen, that's not a strategy. You got to focus on the charts. We got to focus on what's happening here. And, you don't want to get into these situations. And this is once you have the screen time, right? You start getting some screen time in, you'll start identifying these. You're like, I don't see. I mean, we're going to go through some real world examples here in a minute, but you start looking at these, you start looking at the charts a different way. Instead of it just going up, you want to be patient. Like a good trader, patient trader, wait for the setup. I know for a fact, if I rush into a trade, I'm probably going to pay something, right? Whether you could get lucky and you just catch a rip and maybe you're scalping and stuff like that. That's entirely different. But when you're looking for a chart setup, you're looking for something along the lines, like I said, a bull flag, a falling wedge. So we're looking right in here, a formation that is getting tighter. And then the next one, the ascending triangle. Again, range is getting tight. Eventually, it's going to come to a point where, yes, it could break out here, or when range gets tight and the stock is just pinging a little bit back and forth here, it could break out here. It could also, fail. And this is why you use stops again. It could also fail and break down to the downside. So you just want to be careful when trading. And when you're looking at these setups, I mean, as I've been talking through this challenge, there's no for sure thing, right? We want to use, as option traders, we want to use probabilities. We want to have it be a good probability of us making money, right? And again, I'll show you the bearish side of things too. Like these could definitely break out, but you could play these charts any way that you want. Like if you're trading the ascending triangle, you could trade this bullish and looking for a breakout to the upside, right? Or if you're like thinking against the stock, you could also trade this to the downside here. It's the same exact situation. We have to be on. No, it doesn't matter. Andrew, it doesn't matter. So you could say, like, if I'm looking at a chart like this, depending if I'm bearish or bullish on the stock at the point in time, and a lot of things come into factors. Like, okay, I could trade this pattern bullishly, or I could trade it bearishly, right? I don't even know if that's a word, but we're making new words here. But this is what you'd be looking for, ascending triangle, and this is the some of the more famous patterns here. The double bottom. Now, I know some of these terms kind of sound like, other positions, but the double bottom also very, very famous. I mean, when you look for these all the time, and what you're looking for is, support and resistance. Down in here, we have the support area, then we have, the resistance area, and you're looking for it to break out. I mean, most times when I'm trading a chart like this that's on a double bottom here, is I am looking at buying down in here. If it let me erase this right here. If it tests once, and it comes down here, makes another reversal, I'll most likely buy like right in this area, right in here. So let me so I'm looking to buy this rip up. And if I know that it's coming through resistance here, I'll sell before it gets up to here. So again, I'm going to, if it develops a double bottom chart, I'm looking to buy this next leg up, and I'm probably selling before it gets to resistance. And sure, it could break through, but that's going to be in an entirely different range. Yeah, my experience on a double bottom, the second bottom doesn't have to hit a higher level. Hank, I agree. And like these are charts that we made. That's why I want to go through some real world examples, because you're gonna be looking at charts and it doesn't actually hit the number exactly. And I got some examples. I have some examples for that as well. So to go along with the double bottom, we also have the triple bottom, right? So same exact thing, except it forms a bottom 3 times versus the twice on the double bottom. Reversal is the same as a pullback. I mean, it really depends on what you're looking at. I mean, going through the next ones here for if you're looking at a bear flag here, this is definitely dangerous when you're trading, because what happens, same thing with bull flags. What happens to a lot of people with bear flags is, I mean, I know like in trading 2020, 2021, we're used to like the V-shaped recovery, right? A V-shaped recovery. Now, I'll take questions when we're going through the real chart examples. I just want to kind of grind through these examples, and we can look at real charts, and we'll go through time formats and different things like that. I see a lot of questions in the chat here. So we're gonna go through the charts. We're gonna go through real world examples. We'll do the giveaway, and then we're going to do a live Q&A again, similar to what we did yesterday. So bear flag, number one mistake people try to do is catch the knife. Like they try to buy right in here. And sure, it goes their direction a little bit, and sure, you can make money catching the knife, but the probability is not on your side, because most times what you're looking for is a breakdown to the downside like we have in here. So if you see a stock going down, I know for a fact, like even for me, when we're bullish, we're bullish so much, like you get stuck in this mentality. It's like, okay, is this something that you want to mess with? Is this a bear flag forming? That's the questions you want to start asking yourself. Like after today, some of the homework's going to be like, hey, take a look at some charts. Can you identify some of these setups, or look at some of your past trades and say, hey, I lost money here. Was it because I traded the setup wrong? Did I not identify the setup? Was I the herd? Did I get trapped? Did I take the bait? Right? And in here, you just want to be very careful when you're buying. If you're trying to get long, that you're not in a bear flag, because a lot of people they'll go long and then they're gonna get axed, right? Rising wedge is also, I think the rising wedge is also very tricky, because when you're in a rising wedge situation, again, you're having a big move to the downside, and then it is slowly basically pinging back and forth, and most people think that this is a bullish sign, yet when the range gets tight, it then has a sorry about that. Has a major breakdown to the downside. And most times when I see something like this, I kind of wait. That's why you wait for confirmation. You could get long here, but you could have a big problem, because if this decides to flush, it's going to flush quick. I mean, when you're in a situation like this, you want to be very careful. Most people think like, oh, it's a V-shaped recovery, and it could be, but you want to make sure it's moving. And that's why, like, when I'm trading a situation like this, most people think it's going to have just push up. I look at other things. Like if I'm trading this on like a Tesla stock, I look at, okay, what's the Qs doing? Most times, like the algos are all running together, right? So they're running SPY, they're running the Qs together. So if you're trading, let's say you're trading Apple, you're trading an individual stock, look at, are the formations lining up with Q, SPY, and see if there's any patterns there. That's why, like when I trade, I'll show you my charts, is I always have like the NASDAQ up, or I always have SPY up alongside what I'm trading to kind of see, okay, are these moving together? Are these moving in sync? Because a lot of times you'll see, like, due to the algos, these are all actually running together, right? So that is the rising wedge. So again, just be very careful. And then the descending triangle, a lot of people think of this as consolidation when it's coming down to the downside, and they're like, oh yeah, it's consolidating, it's doing this, it made a move down, it's holding, there is support here, I'm gonna get into a position. But just be mindful that when you're in a wedge situation, sure, it could break to the downside or to the upside, and sure, this could definitely have a recovery to the upside. But when you're looking at a bearish chart here, it's most likely going to break to the downside, and that's why you want to have confirmation before you take a trade. Now, sometimes as traders, I know that we get a little bit of FOMO when it starts. You're like, oh, I knew it was going to break to the downside. Why didn't I put a position on here? Because in here, I mean, it could recover, but it could also break to the downside. You don't know. So that's why you want to wait for confirmation before entering the trade. And if you're looking to get short this stock, you see confirmation, your stops could be up in here. Meanwhile, your profit targets are going to be down this way. So keep your profit targets a little bit tight in case it does reverse against you and it does decide to go to the upside here. We don't know. And that's the thing. Like a lot of people will say, well, hey, Nick, how do you know? How do you know like which way it's going to go? And honestly, you don't know which way it's going to go. You have to have the chart set up and have probability on your side. Like if you notice a situation like this, it's probably going to go down lower. So you could get in a little bit early if you want, or you could also trade the confirmation. And honestly, like what makes things difficult, obviously, when we're trading setups like this, like we could have something happen to me like a few weeks ago. I was like trading some really great setups, and then there was some political news that came out and just destroyed the setup. But as soon as it destroyed the setup, you get out and you'd be like, okay, I need to get out. I don't know what's happened. Everything just ruined. Because a lot of times you're going to be in a situation where the algos hit the news way before you do. The algos read the news, and you may not know this, but algos actually read the news, and they read the news before CNBC pushes it out, before Yahoo Finance pushes it out. The algos are, they're quick, so they're going to read. So sometimes if you're in a setup such as this or any other setup, and something dramatically changes real quickly, you're starting to see some really quick price action, there's most likely a news event happening, and as soon as the setup breaks, you should get out of the trade because you don't know what's happening. The setup is broken anyway, so you should just exit. And a lot of times what happens is a news event happens and you're like, oh yeah, okay, glad I exited, and sometimes it costs you some money and stuff like that, but you can always get back in. You can always get back into a trade. Just like the double bottom, we also have the double top, which is something that's pretty common. Also the triple top as well. So you're looking at this, you're looking at a stock to go up, and it doesn't pass go anymore. And an area, you'll get into an area where the stock just doesn't go up anymore. Amazon or there's a bunch of stocks right now that are just stuck. We'll look at Amazon and stuff like that. But news always destroys patterns. So just figured out how to chat. What's going on, Mike? CW, how you doing? Just going through some charts here. We're gonna go through some real world examples too. So right now, in the double top and also a triple top, you'll get into these. We're kind of into these right now where we're at resistance. We're at a point in time where the stock's not going up. And right now in the market's kind of like going back and forth, back and forth, back and forth. And, sometimes we're at all-time highs. Sometimes we're just below it. Sometimes it's just kind of peeing back and forth. And sometimes, right now what you're seeing is a lot of inside days. And what an inside day is, when you're looking at it inside, you're looking at it, it's just moving inside support and resistance area, okay? So I'm going to get into some real examples here. Again, we're going to be taking questions in a little bit here, and then if you guys have any stocks you guys want to look at, but I'm going to pull up my charts here. I'm going to pull up a situation here. One of them being AMC. Okay, I know it's a pretty popular stock right now, but it's there's actually quite a few setups in here that I want to discuss. Right. So when we're looking at this, right now, I'm not going to enter a trade, and you're like, why is that? Why are you not going to enter a trade here? Is it on the verge of breaking out? Right? But this right here is and this is the 1 year chart, and you could do it. This could absolutely be a double top. Right? This could definitely be a double top on the 1 year chart. So why would I enter a trade right in here if I know that we're coming up on resistance? I'd rather wait for a confirmation. And sure, it could go a little bit higher than 20. It could go to 21. It could go to 21.50 and then reverse. It's not necessarily going to hit the exact target, right? When you're looking at it here, right down in this area, we also had another situation where there was a potential double top right in here, right? It was not looking like it wanted to break through, but then we had a strong breakthrough and it was good to go. Once it hit like this, the 16 area, pretty good to go. Pretty good to go back up to 20, right? But you never really know, and that's the thing. Like, you have to put the situation, that the probability has to be on your side. Like, would you rather enter, if you're looking at it, would you rather enter the trade right here to go long, or would you rather enter it here, right? What would you rather do? And then you also had with AMC, you also had multiple confirmations here. Now, if I zoom in right in here, you can see that there was a bull flag forming right here, and the way that I see that is you have, I mean, it's a little sloppy here. Actually, let me hold up. Let me zoom out here. Okay, so you had a bull flag set up right in here, right? This is what looked like, and so you could have traded the bull flag here. So there was a couple confirmations that would have been good. When you have multiple confirmations of breakouts, you take a chance, right? You take a chance. Going into some other stocks here, if we look at, like I mentioned, Amazon. Amazon is in a, basically I would call like a triple top situation, where we have one top here, and we made another top here. And each time, if you look here, I mean, this got rejected hard at around, what price is this? Like $35.50. Got rejected here at 34, basically 3,500. Then it got rejected here again, 35.50. Now, is it going to make another run with it? And then you can see, the being inside right here. We're just inside right now. This is the inside. So I mean, it definitely brings opportunity for you when you see patterns like this. Is, if you want to get long, take a shot at the bottom of this, because if it's just pinging back and forth like this is, like for a whole year, chances are when it gets down to the bottom range, it's going to get bought up again. But you also want to be careful when you get down into these other areas. Like, yes, it does drop below the support area, right? And a lot of times what happens, it takes out people's stops, rips back up. Takes out people's stops, rips back up. Takes out people's stops, rips back up. So you want to be careful that when you're setting stops, like if you buy here, you just have to know that the algos, I mean, the stock market wants your money. And that's what it is. The stock market, they want your money. They want all of it, right? So they're going to do things, and yes, it's not fair. And sometimes when I'm trading, it is frustrating when they take your stop out and then goes the direction that you want to go. I'm not saying you need to set like a super loose stop or anything, but just understand, like most times, like 90% of the time when you put a trade on, you're going to get tested. You're going to be tested in a way that you didn't know was there. Like, man, they're really applying pressure to me. I know that I'm right. I can't believe that this is happening. I can't believe this stock is dropping, and say that to, like the weed stocks this year, right? It's like, oh yeah, I can't believe it's this low. I can't believe this happened. I can't believe that happened. I can't believe, Facebook is dropping down to like 250, and now it's up to all-time highs. And Facebook's actually a really good example where they were definitely stopping people out. Because if you look in here, if you look at this area here, you look at this area right in here, and then you look at this area right in here, we had another situation where Facebook was essentially inside, and it was kind of hanging on here. And what I use a lot of times, and I'll show you this in a second, but and you can use these. I'm using the daily time frame here. You can use these time frames on whether it's the 5 minute, the 15 minute, or the 1 minute even. What I normally look at, like for the 5 minute and the 15 minute, or like the flags and ascending triangles and all that. When you're looking at the 1 year chart, you're looking for more like double chops, triple chops, and like channels and ranges that the stock is typically moving in, right? But the one thing that I like to take a chance on, one thing for me, so on my charts here, I have something called the moving averages. So the purple line for me is the 200-day, the orange line, yellow line is the 50-day moving average, and the 10-day is the blue line, is the 10-day moving average. And what this tracks is what was the average price for the last 10 days, for the last 50 days, and for the last 20 days. Because a lot of times when stocks sell off, they gravitate to these points. And as you can see here, hit the 200-day, bounced up, hit the 200-day, bounced up, came to the 50-day, bounced up, came and tested the 200-day moving average. So I look at these moving averages for clarity, and I actually have a chart. I'm not going to go through it right now, but I do have a tutorial on YouTube on setting up, basically these indicators. Look up us versus herd moving averages on YouTube, and you'll see how to track that. I do use RSI a little bit to try to track oversold or overbought. But just be one thing that I want to say about indicators is indicators don't give you, as a trader, an edge. And some people are like, oh yeah, I'm gonna buy every time RSI is gonna get oversold, or I'm gonna short every time RSI gets overbought, right? I'm gonna do this, I'm gonna do that. But listen, you're not the only person with this indicator, okay? Algos read if I have access to this, they give you access to this information on Webull, on free platforms, on FinViz, on TradingView. If they don't actually give you any type of edge. And the reason why I like the moving average is the best is because when I'm an options trader, I'm looking at price. I'm looking at what price dictates the what's going on right now. Like what are some of the gravitational points? What's the average price Facebook or SPY or Qs have been? And the moving averages have definitely given me clarity during times of turmoil. Like when we're selling off hard, like looking at Facebook here, when we're selling off hard right here, it's like, oh, well, it just came down to the 200-day moving average, and it's okay. It's going to consolidate. And here, it's like, okay, when we're in this situation right here, it's like, okay, it's under the 200-day moving average. Things, and if anybody see my YouTube videos, I talk about this almost every day. Things could get really dicey here, right? This could definitely break down to the downside, but look what happened here. It bounced and everything's okay. Everything's okay. We're back. We're hitting all-time highs, and and then I like to use them. I like to use them as more gravitational points, and so that I understand where a trade is. Like if a stock starts to get super extended here, like right up in here in Facebook, if it starts to get extended off the 10-day moving average, I start to question my trades. Like, okay, do I want to get long a stock that is super extended over its 10-day moving average? I have better probability of being successful if it comes down to the 10-day moving average. And a lot of times, like if you're looking in, like especially 2020, we would get extended off the 10-day moving average. It would pull back. You'd buy the pullback, and it would bounce off there, and we would keep going, right? So it's definitely difficult when guessing price and all that. So that's why you want to wait for setups. You want to see, okay, what's the average price? What is it looking at? But that's why I just wanted to be clear that it doesn't give you any edge. The indicators, it just tells you, the moving average tells you where the price is, but you could look at RSI, you can look at Keltner channels, you can look at all this stuff. You can look at, there's like, if you go through Thinkorswim, I mean, there's hundreds of studies that you can add on here, and you'll start seeing traders on Twitter and stuff, and they're like, man, you have so many indicators on here, I don't even know what the price of the stock is, and like, oh yeah, this one. And I found that when I'm the most successful at options trading is when I tone the noise out. I focus on the price. And yesterday we went through options contract pricing. We're going through charting right now, looking at the stock price. Like, what is the stock price? Are we in a place where these things could bounce? Things could reverse. Looking at a different setup today. Looking at, let's actually pull up NVIDIA here. So NVIDIA, it had an inside day here, and this was, kind of pretty much bearish, but this thing didn't go anywhere. This thing didn't crack below. If you're looking at here, this was yesterday, basically hung out here, and this was, this is the 5-minute time frame. But there's multiple things that you could look at here. It wasn't really exciting, but you could definitely short this. You could definitely short this resistance. You could definitely buy the support down in here, right? And I know that a lot of people. I mean, if there is, like Kathleen saying, if you like a particular indicator, definitely use it. But for me and my trading strategy and what's good for me is I like to focus on price, less noise, because what you'll find is a lot of different indicators start to contradict the indicators, and then you start getting confused. You're like, I don't know, this indicator is saying this and this indicator is saying that. So that's why for me, I really just look at the moving averages and wait for those setups to occur. Now in the chat, let's take some charts you guys want to look at so we can analyze, or any stocks that you guys are looking at that you want to kind of analyze and see, anything. While you're doing that, let's look at GameStop. Actually is nice triangle right in here, where if you look, this was, no, it's not exact here, but this was a great setup to actually, I mean, I'm actually surprised myself that if how well this worked out, that this was actually a really great trade here if you were able to get into here, right? So, you're seeing it's developing this triangle. Again, range is getting tight. You're looking for range to get tight. And then it broke. The other confirmation here, the other confirmation that kind of would help you out with this trade here, I'll zoom in so you can see a little bit better. But right in here, I'm going to circle it for you. you actually have the 10-day moving average crossing over the 50-day moving average, and this is what you call is the golden a golden cross, right? So you have a golden cross, and this definitely helps you out determining, okay, this is bullish, right? If you have the 10-day crossing over the 50-day to the downside, then that is definitely bearish. But we had the 10-day moving average crossing over the 50-day, and that was a signal for a lot of people to get in. And as you can see here, it really paid out, because this thing went from 180 to, after hours, 242 right now. All right, XOM. And I know this is a lot of information and it takes time. Like, what a lot of people don't understand or don't see is the actual work. Like what I'm presenting to you is work that I've done for years, right? I've done this for years. And a lot of people, they want to make, the money that they see on Instagram, or the money they see of people they follow on Twitter. But what they don't see is like, hey, that guy traded for 15 years. He knows setups like the back of his hand. And the best thing as a new trader that you could do is get your screen time in. You want to get your screen time in. So, XOM, actually nice bull flag set up right in here. But it's also definitely very dicey being at all-time highs here, right? Because you could definitely get stopped out, right? But you have a nice channel, nice flag setting up right in here. So right now, I would say that it's still in this channel. Right now, it could be a potential double top as well. And just so you know, you could have multiple chart setups at one time, right? But the other thing is nice. It is coming up. It is hanging out right here at the 50-day moving average. So it's just kind of hanging out just in here. For me, this trade doesn't look too interesting because it doesn't seem like you're going to get like a lot of movement out of it, right? So I would wait for myself for a little bit of a better setup. Snapchat. And then we'll talk about Roblox. All right. Snapchat, I mean, it's to me it's looking a little bit tired here. You have one of the biggest concerns here. You do have the 10-day moving average, but it hasn't crossed over. Like I was talking about, this death cross. This death cross actually happened right in here, is where the 10-day crossed over the 50-day. Also, the biggest concern would be for if the 50-day crosses over the 200-day to the downside. That is definitely not good. GTFO, get out of there. But I mean, could this be? Let's take a look here. So this could definitely be setting up a formation here for definitely these channels. Let me pull this up. But for me, it's pinging back and forth, pinging back and forth, pinging back and forth. Could it break to the upside right now? I mean, it could be a good setup. Just make sure your stops are. I mean, it's right now outside. I know I didn't draw these exactly. I mean, with this drawing tool, doesn't allow me to really concentrate on that. But it could also, as you can see, like right in here, it bring it back inside. And what we've been seeing right now in the market is it actually kind of going just outside, and then it bringing it back inside to like this area, right? So going long here, actually, you might want to take a chance, but also you want to be careful, because it could definitely come back on the inside and cause you some losses. And you don't actually know when the breakout is going to be, but right now it kind of does look like it wants to break out. It is kind of on the outside, so I mean, I would probably take a chance. So definitely descending triangle right there. Roblox. Now that's a lot of these are like IPO ones, like because people like don't know what is going on, right? Now this one actually very blatant, as you can see here, very blatant bull flag right in here, and you buy the breakout. You also have to be careful where there's potential resistance. and this could have been a double top, and it could have went to the downside. But once it cleared that 82.50, I mean, there's nothing to stop this stock now. There's nothing to stop this stock, right? Now, do you want to buy it up here? I mean, you kind of missed the move a little bit. You want to wait for the next setup. Right now, for me, I would say there's not really much setup. Right now, it's 50-50. Could it go to the upside more? Sure. Could it come to the downside? Absolutely. So you want this setup? I mean, definitely would have been better to trade this breakout once it got. If you traded like 84, 85, I mean, you're good. You traded, even if you traded like the 83, took a chance at 83 on the breakout, because you have double confirmations here that it broke through the resistance and it broke through this bull flag right in here. So yeah, I mean, RSI is overbought, but that's why it's cooling down. As you can see, it's just hanging out here, right? Let's look at. I did talk about AMC already. We can look at Disney. We'll do a couple more of these, and then we'll do the giveaway, and then we'll do a Q&A. Okay. So Disney definitely is dicey. You know, immediately, and this is why I have the moving averages, because without even like looking at a chart setup, you can absolutely see it's under the 50-day moving average. It is above the 10-day moving average, but this thing got dicey. It was let's see here. How did it react today? So actually the news. So there was news today. I don't know if you heard that Amazon bought MGM Studios, and I wasn't sure if that was going to impact it a little bit. But for me, it's always been kind of dicey. And as you can see here, you know, if we're looking at the highs here, it's not enough for me. It's not enough for me to really get this. It is moving in a channel, but you really want to see it if you're looking for a breakout. I mean, I'm looking for something that is probably around here. You know, I would rather buy up in here, because right now it could definitely flop around, and when you're in this range, it could definitely come down to this area, which would be bad. And there's more support. There's more support like at 170. It did test the 170 area. When if you're looking at support and resistance here, more support at 170 than there is like 176. And you know, you kind of got the fade. Now, if you're looking at like past performance, right? You're looking at, okay, what has this done in the past? And this right here, it was forming a descending pattern, and then we had a break to the upside. And that break just so happened to coincide with this 50-day moving average right in here. So, like, the stuff's not rocket science, but I think the issue is for us as humans controlling ourselves, not buying the dip. Because if you look at right in here, this channel right in here, if you bought the dip every day, and when you're zoomed in, it doesn't really look like anything, because you're just like, oh, if you bought the dip here every day, you're going to be costing yourself a lot of money. You don't actually know when that reversal is going to happen, right? So you don't know when this reversal is going to happen, and it's going to happen, and it just so happened to coincide. And that's why you want to wait for confirmation. It's better to buy this candle right here around 178 than it is to buy, 178 back here. You buy 178. There was a time in the market where we're just buying any dip in sight, and then we were getting in trouble. You know what I mean? We were getting in trouble. Now we're in a situation where you actually, and this is why there's been a lot of traders that have blown up their accounts. And then one of the reasons why I wanted to do this training is because when the market's doing well, you think you're a genius, but all you're doing is really, buying the dip. If we look at, let's look at this. Let's look at the Apple 2-year chart. Okay, when the market is doing well, and it just goes up like this. We just went up every day. You think you're a genius, like, oh man, the only strategy I need to know is to buy the dip. And this thing's just going straight up. Every day we're going up. Every day we're going up. I'm a genius. I'm lock and loaded. And sure, a lot of people did well that were inexperienced. But then the question is, when we got into here, easy mode turned off. And you're like, I don't know what is going on here, right? And this is where people get in trouble. Like, what is the point? And this is why you need to know, the fundamentals. Like, what's the point back in here, making all this money, making all the money in back in here just to lose it here? Do you want to give up a year's worth of gains in a month? And that's what happened. And you'll notice, like, if you rock with us versus herd in the chat, I don't want to throw anybody under the bus or anything, but you'll know when the market's doing really well. Our community is very, very active. I mean, it's exciting. Everyone's doing well. Stock market's doing well. We want to do that. But when trading gets hard, like it is now, it gets real quiet, right? And then you really see, like, who are the traders that are actually putting in the work, who's here. And there's people that have been in the UvH fam, our community, for years, and they're rock solid traders. And then there's people that have joined 2 months ago, and they're like, oh, I have no idea what's going on. I'm losing money. And they think it's themselves, but they just need to educate themselves. You have to educate yourself. You can't just, in this time in the market, you can't just hope it goes up, right? You just can't hope, because the people that bought this dip, how long did it take them to actually get back to break even? And I'm just talking about stocks. Like, if they had options, they were dead. If you bought the dip on options here, those are long gone. Those are long gone. But here was September. It didn't actually come back to these levels until December, January, and then everything fell apart. And people are like, oh yeah, we're out of the woods, we're back, and then we're just pinging back and forth. And people lose a lot of money to chop. But one interesting thing that I want to point out about Apple, as you can see here, is the chopping, but the range is getting very, very tight. As you can see here, the 200-day, the 10-day, and the 50-day are all converging here. So we could be in a situation pretty soon. I mean, might not be yet. Apple's been quiet, but is this going to break out? Is it not going to break out, or is it going to chill here? So right now the ranges are getting really, really, really tight on this, and I mean, I think Apple's going to be one to watch here, but the question is, what's the catalyst? It's not moving. I mean, today is down 5 cents, and Apple over the last 2 days, you can see on the intraday, I mean, it dropped, and then we're essentially going nowhere. But this is where these types of charts, when you're a trader, most people just want to do it when it's easy. But we're here, us versus herd, we're here through it all. The easy times, the hard times, and everything in between. That's what we do it for. This is why, because it's a lifestyle. It's like working out, right? You don't just work out when you put on too much COVID weight, right? You're stuck inside. You work out for the rest of your life. It becomes a part of your lifestyle. You don't just, if you're eating McDonald's every day, that's going to have one effect. But if you're eating, you're eating your greens and all that stuff every day, that's going to have a different impact. The same thing here. I don't just trade when it's easy, but I mean, I will show you an example here, especially my P&L for the Us versus Herd Academy. I'll show you my P&L here in a second, kind of show you real world examples of what we've been going through. So we're gonna announce the winner here. So Jeff, I know you guys have been getting accustomed to Jeff. Jeff, let us know who won. We're gonna talk about the Academy real quick, what it is, what this winner is going to be getting. Now, the reason why I put out the Us versus Herd Academy is because of all the information that's out there. I didn't find a really good source of information that was really catered for us. There was all these people saying, hey, you can get rich quick, you could do this, you could do that, you could do whatever you want to do, right? And it's like, oh, you just learn this one pattern, you're going to be rich by Christmas, you're going to do that. So I wanted to create something that was for us, for people that want to put the work in, who actually want to trade day in, day out. And that's what I put it through. And we put in, not only is it like course content, but we put together a lot of tools, a lot of information. So again, no magic formulas. This is straight from the experience that I've taken. And what I look for is for you to develop your own trading plan, right? So the goal is for you to develop your own trading plan, not to copy Nick's trades, not to copy somebody else's, not to do any of that. The goal of Us versus Hurt Academy is for you to find your strengths and weaknesses, and we've been working through that, for you to find your strengths, your weaknesses, to determine like who are you as a trader, what are you good at. Some people are like, I'm only good at credit spreads. Well, maybe I'm only good at buying naked options. Maybe I'm only good at iron condors. You have to figure that out. But that's why we present the materials to you to help you determine what you're good at and what you're not good at and what your strengths are. And obviously charting is going to be a big piece of that. So what it comes down to, Us versus Hurt Academy, what this person is going to get, the training course, impact report, and this is going to be a lifetime membership, the options, trade ideas, access to our private community through our Discord, which also offers option flow tools. And then I also do a one-on-one assistance with the people that are in the UvH Academy. So we get to the training course. So you get to see my face over there. Currently, there's over 50 videos, 12 plus hours of course content. And with a lifetime membership, you are going to get access to future videos. There's also a lot of content that I've been working on right now to continue to add value to the academy. So I have options content. I'm also working on a futures trading course, but you can go through the whole thing. I'm not going to get into too much of a depth here, but it goes through everything, including like the psychological piece, minimizing your losses, mindset, motivation, trading strategies, and everything in between. Everything that I've learned over the last 10 years, I've put into this. It took me almost 3 years to make this this academy. So I wanted it to be something that I was proud of and that would make a difference in people's lives. I didn't want to just have another product on the internet that people were like, oh, he's just trying to get rich off of course and stuff. Like, if you go through the academy with me, I want you to do the work. This is not going to be easy. And as you can see here from what we've been doing since day one to now and the rest of the week, is we're putting in real work, right? And you'll get all the downloadable, all the course materials downloadable as well. If you've been here the first day, you've already done the self-assessment, and then you're going to get the downloadable content. Trade ideas. So the trade ideas, trade ideas is a section in the academy that I put together, and a few times a month I look at setups. And what the trade ideas is not for you to, they're not like trade alerts or anything, but it's for you to look at trades in the real time, the real world, to say, hey, why was I looking at this trade, or why is Nick looking at this trade? So I post, as you can see here, I post the chart, the idea, the plan, and everything that makes up this trade. Like, what is the strategy that I'm going to use here? Why do I like this trade? Why do I not like this trade? What are my profit targets? What are my loss targets? And that's this is what this blog area is. So as part of the academy, the trade ideas, I go through it and I write up a trade idea and I say, okay, this is the reasons why I'm in this. This is why I'm interested in this. This is the strategy that I took, and it's going to highlight real trades that I'm working on. We look at the situation, the setups, the charts, the strategies, and the results, right? So you might want to know, what are the results of this? So in 2021, right now, the trade ideas section is up $612 profit, and you can go in there and look for yourself. But looking at it here, you can kind of see the P&L tells a story of a real trader, right? And these positions, I know they're on the smaller side because I want everybody to be able to take part in learning. Like if I'm like, oh, I'm only trading Amazon credit spreads that cost me $5,000, it's not relatable to a lot of people. So a lot of these, what I try to start is beginner trades, and to get people accustomed with learning how to trade. And that way you can take it on your own. Like when you pay for like a trade alert service, if that guy gets hit by a bus, you don't actually learn how to trade. Like with the Us versus Hurt Academy, I want you to know how to trade. Like, I don't want you to rely on me at all. I don't want you to rely on anything that, maybe the knowledge, but you shouldn't be relying on me. You shouldn't be relying on anybody next to you to be profitable in the market. If you rely on somebody else in the market to be profitable, you're not gonna make it. You're not gonna make it, right? So through this, one of the stories I say is like, okay, back in January and February, January was a great month for trades. There was a lot of opportunity. We stacked 4 trades, $340 profit total. February, this is when things started to get more difficult. And you'll notice here with the trade ideas, when things get difficult, I don't just keep throwing money at it. I scale back the risk. And when things don't go my way, I don't continue to trade. Like you don't want to just keep going, right? You just don't want to keep pushing and saying like, okay, I want to make my money back. Because as you can see here, March and April, back to back losing months. And this is where, if you're trading, this is where most people quit, right in here. It's like, oh, I was doing well, and now I don't know what's happening. I lost on 2 out of the 3 trades in March and April for the trade ideas. Like, what is going on? And most people will quit. Most people are going to quit. And then they don't get to the reward. In May, Trade Ideas did $744 profit, made back the last 2 months of losses, and then some, right? So I'm back into the profit zone. So this is how trading goes. I mean, there's highs, there's lows, there's everything in between. And that's what I wanted to showcase with the Academy, is to show you there's going to be highs, there's going to be great months, there's going to be terrible months. And in May, I didn't do a lot of trades, but I concentrated on certain setups. And as you can see now, like back in January, there were a lot of setups. Right now, you have to really be selective to be profitable. Okay. And then the last thing that they're going to get is the impact report. So every Sunday, we send out an impact report. It looks like this. It gives you a heads up of everything that's going to happen the week: economic news, earnings, economic data, snapshot, stock split, dividend changes, the whole thing. I won't bore you with all the details because there's a lot. M&A. I mean, the report every week is literally like 20 to 30 pages we send out. And what I use it for is to say, hey, this is what's going on this week. Is there anything? And a lot of times, like, okay, here's the Fed schedule. This is when the president's going to speak. If I know they're going to mention it, if I know that Jerome Powell or whoever is going to mention inflation this week, and if it's a heavy Fed week, maybe scale it back a little bit. And that's what we try to do, is give you the tools. And we provide this every week. And then we also provide the private community, private Discord. And in this, it's not just a community for learning how to, you can connect with other people as well. But as you can see, I'm actually going to bring over the Discord right over here. And we actually have options flow through Quant Data. We pay for it directly as part of the Academy. And in here, we try to look at what options flow is. And I use it a lot to see, okay, this was today. I could actually call up today what was the top options flow for today. And as you can see here, top bullish flow, we had KHC, bullish flow, top bullish flow. I mean, Tesla's always like in the top 10 every single day. But also you can see here, they also were big on the call volume as well. They had 68 million. And some days you'll get up here, there might be $1 billion in premium in here. Also, I use it as like a research tool. You can see what the unusual activity, and this is basically pulling in unusual activity, anything above $100,000 in premium or more. And what I like to do is I like to say, okay, is there a stock that I'm interested in? What kind of activity are we looking at, right? And if we look at, I can actually search here. Let me look at snow. I was interested in snow, and I was looking at, for some reason, there was a lot of the 18th and the 20th. There was a lot of bullish call volume. Huge orders. What was happening with snow at that time? And if we look at snow, during the 20th, 21st, that time frame, it cratered down here, but then we had a pre-earnings, and then also when it cratered down in here, there was a bunch of upgrades for that stock. So that is what you could use it for. I mean, that's real-time data. Also, the other thing that I like to use it for is there's something here called quant alerts. Now, these are basically what it does is it tracks momentum. It doesn't necessarily call out like buying or selling and sure, like it says go long, go short. But what I like to use it for is basically tracking momentum. Like right now, airlines are pretty big. Space the other day gave a good alert. NKLA today actually gave a really good alert. And then it kind of helps you to see, takes out some of the noise to help you concentrate. So I concentrate on option flow to kind of go with what I'm trading with, right? So if I'm looking at particular stocks, I'm in here looking at some of the flow. I look at today, what happened in here, and this is real time. So like if you go through in the morning, this morning AMC was bigger versus at the end of the day, KHC was bigger. You could and then you can kind of look at those charts like, hey, what was actually going on there? What was going on with KHC today, right? And you might be looking at it as like nothing happened. So what are people loading up here for, right? Consolidation, could be anything. So basically, it's Hassan. What I like to use it for is I basically the options flow that you can determine where the premium is going, what it's flowing into, what it's flowing out of, and that way you can make a determination for yourself. I don't use it for alerts or anything. I just use it as like a companion tool. So you'll get lifetime access, free access to updates, editions, includes new videos and modules. So I don't know, Jeff, can you send over the winner when you get a chance? He's gonna send it over to me. I don't have it right now, but send over the winner. The winner right now. We're also running a special on the Us versus Herd Academy. Normally it's around $1,500 lifetime access just for the Kickstart challenge. So just for the next couple weeks, you're gonna have access to it for one time, $9.97 or $97 a month of 12 payments if you're interested in joining. And I will send you all the link if you guys are interested in this here. So that's what we're doing. Let's see. All right, are you guys ready for the winner? I don't know. I'll tell you right now, it's a he. Jeff just texted me. Are we ready for the winner? Who's ready? So, the winner is Matt Wesley. So I don't know if Matt Wesley is here right now. Winners were chosen at random. Matt Wesley. We'll reach out to you. Congratulations, Matt. You've just gotten lifetime access. And if you guys are interested in joining for the deal, you can go to UvHstart.com, UvHstart.com if you're interested in the Academy. Oh, Matt's here. Round of applause for Matt. Congratulations, Matt. Congratulations, man. We'll be reaching out with you with the details. We'll get you access, make sure we have a good email for you, and get you in on there. Now let's go into some Q&A. I know you guys have some questions about the what we went over today in terms of chart pricing. So questions, we'll do questions, whether it's about the Academy, about charting, about your trading. We can answer them. We can answer them now. Kathleen, yes, the deal's going to be running, I think, until June 10th. I'll double check though. I'll double check with my team. I think it's around June 10th, I want to say. So you can go to UvHstart.com and get the deal if you want. Okay. So I'm taking questions right now. If you guys have questions about your trading, let's look at some charts. I know there was Nvidia had earnings. So it looks like they're gonna they're gonna crush some premium for Nvidia earnings. Didn't go anywhere. Snow also had earnings. What did Snow do? Ooh, Snow got crushed. How do you put the 10, 50, 200-day moving average in your charts? Andrew, I said I don't know if you were here. I do have a YouTube video, so if you look up us versus herd indicators on YouTube, there'll be a walkthrough for you there. Nick, if you get busted as a PDT, does it follow you to other brokers? No, you could have 10 brokerage accounts, and they would all reset differently. So you could rotate it that way. Or you could have, if you want, you could have a cash account and a margin account. If you're in, a lot of people don't know this, if you're in a cash account, and I go through this through the UvH Academy, but if you're in a cash account, there is no PDT, but you can only use the cash that you have. So if you have $1,000, you can only trade with $1,000 that day, and then you have to wait till tomorrow to use the $1,000 again. You can't use it continuously. The broker will allow you, but then you'll get what they call is a good faith violation, and you can only get 5 of those per year. So you could use a cash account. Yes, Snow got smoked. I did have Matt, I had a debit call spread that's in trouble there. Let's see what other questions. Weeble hit me already with 2. What are the questions we have here? CRM for earnings tomorrow. Now CRM, I think, is in an interesting spot. And if you're looking at, let me pull up the 1 year here. You know, again, I don't think it's, for me, it's looking dicey, because here, you know, we're here below 200-day moving average. Let me, sorry about that. You're below the 200-day moving average. It could explode, but we're basically pinging between two numbers here. There is some resistance, as you can see. You know, if we're looking at resistance here, range is getting a little tight. So I would say you want to be very careful. I mean, it could get rejected. Now, what you want to see is this starting to make a move up in this area, and if it can move in this area, chances are it could break the trend. So, Hank, it's 30 pages every week. Every week. Not every month. Impact reports every week. So CRM. All right. What other questions? I mean, basically, Hank, the impact report is basically to keep you in the know for the week. You don't actually have to read the whole thing from front to start. You know, we highlight certain sections, and you can choose what you want. And the important information is obviously the top. But I mean, if you want to spend an afternoon and read 30 pages every week, I mean, that's up to you. What's the best time frame to look at trends? I mean, if you're day trading, right? If you're day trading, obviously the most volume is going to be if we look at SPY here. I'll just pull it up. You know, obviously the most volume is going to be in the morning, and then at the close here. And as you can see here with the Qs, the morning, and then at the close. So if you're day trading, you basically want to trade where the volume is. So the first couple hours in the morning. But I mean, setups could happen at any time in the day. You could use that. And I was showing you setups like on a 1 year time frame. You know, so that you know, that's a 1 year on a daily. So you could do that. Do you have a performance report of your overall trades? I'm tracking performance just through the trade ideas right now, but am open to suggestions. can you show your support and resistance lines for SPX and SPY? So what's been interesting and what's been messing people up, including me, is you're like, man, stocks aren't doing so well, but we have like SPY hitting all-time highs and everything like that. You know, right now, if you look, if I zoom out, if you just zoom out a little bit, and a lot of times it helps us to zoom out. What's happening? What's a trend that you're identifying right now on SPY? Is, okay, 50-day moving average. Whoa, that got thick. 50-day moving average right in here, bounce. 50-day moving average, bounce. 50-day moving average, bounce. 50-day moving average, bounce. 50-day moving average, bounce. So you can kind of see the theme here, where the averages are up. We're moving up. And we are getting tested on these flushes to the downside. But if we look at, like, you know, on the monthly here, it's definitely dicey, because we have resistance here. We have a double top. We have a double top right here. When it broke the all-time high here, it created a double top, went all the way down, but we do have it bouncing off the 50-day line here. So is this going to break? Let me pull up the line tool here. I mean, is this going to essentially break this, right? Is it going to break this area? Or, and is it gonna break resistance, or is it gonna come to the downside? So you could set yourself up either way. I think people are kind of thinking downside, but I mean, it could go up, right? It could definitely go up. Like, how do we go around the Feds and the rates? I think they opened their mouth too soon about not raising rates. I know it's coming. I mean, you just have to take it a day at a time, Carmine. You can't predict what anybody. If you trade scared, you're never gonna make any money. Like, if you're scared that somebody's gonna do something, or somebody's gonna do this or do that, if you're scared, don't put a trade on. Don't trade at all. But you're gonna go by months, weeks, maybe even years of not trading as much as you should, and like you'll kind of start getting into the flow. And what I like to do is just test a trade out. Just test a trade and say, hey, let's put on one trade at a time. You know, there was a time when we were going straight up. You know, I was doing 12 to 15 trades at a time. Now I'm doing between 1 and 3. I've lowered my risk. You lower your risk in different times. There's times that you can keep risk higher, and then there's times where you have to keep risk lower. And right now, I feel like I have to keep my risk lower to preserve myself. Because when we're in a situation like this, like looking at SPY, you're in a situation like this, is like, okay, do you really want to short right here? Not necessarily until we get some confirmation. But do you want to go long here? Not necessarily. You don't necessarily want to go long either. So, you know, best thing just to go find some high probability trades and just wait, right? Taking a week off is nice sometimes. Yeah, take a week off, reset. Like sometimes, like a lot of times, we're looking at charts like this. We're like in the thick of it. We're like, oh man, this thing's going on. What happens a lot of times is like you just need to zoom out a little bit. Just zoom out. Take it easy. Zoom out. The trend here is still intact, right? The bull trend is still intact. Now, if you saw this thing start getting shredded down to here, 360, you're like, okay, are we reversing trend here? And that's why you want to be, you know, kind of nimble. If you're holding 12 positions that are bullish and we get a hard rejection, you're going to have a hard time getting out of those trades. But if you have 1 or 2, you're going to be able to move with the market a little bit better. You know, you're going to feel more free. You're going to be like, okay, cut these 2 out. I can reposition myself. I'm going to be back in the game. Versus you have 12 positions, you kind of start thinking to yourself like, oh man, I don't know how to get out of this mess. I don't know what to do. I don't know. There's too many. I don't want to take all this loss. That's why for me right now, you just want to trade slow, look for higher probability setups. And right now, if you're like looking at SPY, is sure, this thing got a little bit detached from the 10-day in the 50-day moving average, I'd be looking for an entry like 415 area, 409, 410. Not chasing the past few months has made a huge difference in the amount of less than ideal trades I've had to get stopped out on. I agree. I feel June will be red. Am I missing something if SPY doesn't break out? I mean, yeah, of course. If SPY doesn't break out, but what I'm thinking of, Hank, is that we're gonna ping between numbers here. I don't know if we're gonna be red or green or whatever, but I feel like, I mean, we've had a good run. We've had a good run. March was great for SPY, but right now you can see here we are in essentially a box. And what helps a lot of times is when you're trading, especially like on the intraday. Let me pull up like an intraday chart here. What was a good one today? I think oh yeah, Apple was pretty good today. You're setting yourself up. What you can do, a little trick that you can do. Let me zoom in here a little bit, and you're like, yeah, I don't know if this is going to go up or down. This is what you call chop. And what you could do is you could set yourself up with a box, and you can trade within the box, or you can trade when it gets outside the box, right? But for me, like, I wouldn't trade this chart at all because it's just very choppy and you don't know if it's going up or down. We're not having a breakout to the upside. We're not having a breakout to the downside. Not really good movement today on Apple. So this would be a trade that I would actually, or a stock I would pass on today, right? But then if you look at a trade today like Tesla had some nice setups here. As you can see on the 5-day, or on the 5-minute, I should say, you had a couple wedges, and then we broke to the upside, right? So there was some good trade. There was a couple good setups today on Tesla that you could have took. Same thing here, and this is what I was talking about earlier today. Is I'll zoom in right in here. Is people are shorting into this weakness, and what happened was we essentially, basically it was creating a tight formation and it ripped to the upside. So you gotta watch that. You gotta watch that. And if you are shorting it, have a stop on, because would you rather get stopped out like around here, or would you be like holding on to like 617 and this thing's just going higher? You know what I mean? Juan, you can go to UvHstart.com, UvHstart.com, and I'll include it in the homework for tonight, and I'll include it in I'll send it over to you in text and all that too. All right, any other questions here? I think we went over a lot of stuff today. Did a lot of chart work today. I mean, congratulations if you guys made it through. We're going on an hour and a half now, so congratulations again, Matt Wesley. We'll be connecting with you to get you your membership to the academy. So, any other questions before I take off here? MVP, it's a pleasure, man. I mean, like I said, I love talking about the market. I love hanging out. I love this whole experience, and hopefully we could do it again. So, without further ado, you guys have a great rest of your day. Enjoy some of this weather. If it's too hot by you, get a fan, have a nice drink, take a sip. As always, stay safe, stay green. It's us versus herd.